Good morning, Paul Georgie from Allendale. It's November 30th, Wednesday morning, and the U.S. Or the world banks, central banks, surprised markets here this morning at 7 o'clock, changing the swap rate on the U.S. dollar by 0.5%. It was an involvement of the U.S. Fed, the Canadian Central Bank, the England Central Bank, Japan's, Europe's Central Bank, Swiss was also involved. All this coordinated effort to help the monetary system of the world, and it has its positive effect. Grain markets went from being 7.8 lower in the corn market to 3 higher here by 7:15. We've seen the bean market rally as well. Stock market showed a lot of strength, and the U.S. dollar basically fell out of bed, down 80-some points at one time. As we speak, it's down around 60 points lower. We took out a major uptrend in the U.S. dollar index on the chart. So some huge knee-jerk reactions off of this announcement. Then we had the ADP number come out here this morning showing that we've got payroll increased by 130,000, which was a bigger number than what trade was expecting. We also had China cutting their reserve rate by 0.5%. So a lot of things happening around the world to help confidence of the trader, and that's what we've been talking about and writing about here for the last several weeks, is that we got two problems. We got confidence and demand problem. Well, the confidence problem has been solved here this morning. We're seeing traders and investors willing to come back in and put money into the markets, at least initially here today. The big question is going to be on the demand side. We still haven't seen anything there. We're going to be watching the news wires very closely at 8 o'clock this morning when the USDA typically announces sales. If we have some sales announced here today, we could see some significant jumps in the commodity prices, grain prices especially, because that's where we've been lacking. Demand has been way behind, and if we don't get any demand, prices are going to struggle to move a lot higher. So that's something we're going to be watching very closely. Also, we've got the USDA weekly sales coming out tomorrow morning. The expectations there are going to be probably lower than normal, simply because we had a short week last week with the holiday, and those are the numbers that the USDA are going to be reporting on. In the livestock trade, similar problems there as far as the demand side of the equation goes. Beef prices down 90-some cents last night on the choice. Select was down also. Pork values were lower as well. So product demand and meat demand seems to be sluggish, while fed cattle prices and cash cattle prices continue to work higher. Trade feedlots actually are asking $1 to $2 higher again this week. So some mixed readings there as far as the cash markets goes. How long can the packer continue to slaughter the number of cattle that they're slaughtering on a weekly basis with the negative margins that they've been printing here for several months? The chart picture here this morning on the livestock, we expect that markets will be higher there. In the overnight trade, we got cattle up 80-90 cents now, and hogs in the nearby contracts are higher as well. So I think all commodities here today should find some support as long as these outside markets can continue to hold this knee-jerk reaction that we've seen this morning. If they can hold together and find momentum higher later on the day. So expect volatility here today. We've seen it already here in the last hour or so. Expect that to continue, and we would like for you to call Allendale if you got any questions at all, or check us out on the web, or get subscribed to the Allendale Research Center. We've got some specials running there here to the end of the year, so make sure you get signed up and stay in touch. We want to keep you informed. We wish everybody a very successful trading day. We'll talk to you tomorrow morning. Thank you.